Wave Genius Technical Analysis. Wave Genius Technical Analysis. Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW24 traders for Elliott Wave Trading. Our website is www.24elliottwaves.com. All right, let's get started. Wave Genius, a technical analysis. I'm looking at Apple stock on a monthly chart, and we're going to apply tips and tricks using Wave Genius, okay, technical analysis. All right, so on a monthly chart, we can see that we have a first wave, a second wave, a third Elliott wave, a fourth Elliott wave, and a fifth Elliott wave. Now there is a correction taking place, price going down, one, okay, all right, a two, I'm coloring my corrective wave into red on my chart. This is quite easy wave count, all right, quite easy on a monthly chart. Sometimes you may find it quite easy to count waves on a monthly chart, okay, here it is. So we see now that the price went up 1, 2, 3, 4, 5. No violation of Elliott wave principle. Okay, all right. Very important. The fourth wave is not overlapping the first wave, and the second wave did not cancel. Okay, the first wave. All right. And also, one thing that we need to understand, following our guidelines, we have okay, a trending phase before. All right. And then we have a correction, okay? So this was a trending phase followed by correction. Now we have a new trend that is beginning right at the end of the correction. This is a typical pattern to financial instruments that are called a dynamic bullish financial instrument. All right, this is quite clear. Okay, so from here we have a new trend that's beginning. Most stock will not do this. They may display a complex correction, but very often for a dynamic bullish financial instrument, all right, you may see a trending phase followed by correction. Then we have another trending phase followed by correction. All right. At this point in time, what can we say? All right. Talking about Wave Genius, I want to show you something very important. Talking about Wave Genius, pay attention. One thing I want you to understand, which is a market stable data, if a financial instrument is trending up, and we count the first wave and the second wave, all right, using the Wave Genius tips and tricks, all right, one will put an horizontal line at the low of the first wave, another horizontal line at the high of the first wave. So you see on my chart, first wave, second wave, third wave, fourth wave, and the fifth wave. As soon as we see the first wave and the second wave, that's it. We will draw horizontal line at the low of the first wave and another horizontal line at the high of the first wave. Now we will measure the width, okay, between the high and the low of the first wave. Why? Talking about Wave Genius, by using this measuring stick, we will project it above the high of the first wave to determine possible, okay, reversal point and also possible high probability, okay, trading zone. All right. So once the price goes above the high, we will project the width of this horizontal channel between the low and the high of the first wave, and then we just put it there. All right. So if the bullish momentum is quite strong, but because if you want to buy during the third Elliott wave, we can buy at the end of okay, the second wave, or place another above the high of the first wave to buy. As the price going up, we will use okay, the height between the low and the high and the high of the first wave to set a target. So if you buy during the third Elliott wave, your first target will be this point here, which is okay, the height of the first wave. All right, so you will set your target there. All right, that will be your first target. If the price, if you want to buy again, you allow the price to break above that level and retest it, and then you will buy again to take it up more. If it goes above that level and going up, you will project again with the same measuring stick up to determine possible reversal and possible entry point. right? The same thing is true in a downtrend. We'll do exactly in a downtrend. We'll replace one horizontal line at the low of the first bearish wave, and also another horizontal line. Okay, we place one horizontal at the high of the first wave, and also another horizontal line at the low of the first bearish wave, and then we project it down as the price is going down to determine possible reversal point. Okay, level that we are likely to exit or take profit. Okay, profit target, set a profit target. Level where we are likely to re-enter the trade to participate in the trend, and also to determine hot spot trading zone. It's quite powerful, wave genius, okay, technical trading, all right? I want to show you for Apple stock on this chart right now, so I want to validate, okay, what I've just said to you now, okay? That strategy is valid on any time frame, all right? If you see a price going up, okay, you see one leg, okay, first move, okay, measure, place one horizontal line at the low of the first move, another horizontal line at the high of the first move, and measure the width of that okay, price action, and then project it in the direction of the price to determine possible reversal point, possible entry point, and also to identify hot spot trading zone. So as you can see on my chart, I counted the first wave, second wave, third wave, fourth wave, and the fifth wave. If you apply that strategy, you will place one horizontal line right here, another horizontal line, okay, at the top of the first wave. I want to remove this horizontal line. So here it is. So my first wave starts from here. That's the low of my first wave. That's the high of my first wave. Now I will measure, okay, the width of my first wave. All right, here it is. As the price starts going up, this will be my measuring stick to determine possible reversal point, possible entry point, possible exit point, and also hot spot trading zone. So as the price breaks above, I can look for opportunity to buy above the high of the first wave here if I want to participate in the third area wave. If I'm swing trading, I know that my okay, target will be at the top right here using the width of the first horizontal channel here. So you see here, as the price goes above the high of the first wave, you see that some traders took profit here. This is a monthly candlestick bear. As the price approached the target zone, they took their first profit here. These are position traders, swing traders, smart wave traders that are taking their first profit here. If you want to re-enter, as I told you, you will re-enter somewhere here. It breaks above here. Look, it retested. Yes or no, my friend? Here it is, it retested here. All right. Now you will re-enter again the trend, and you will project again this channel, this okay, measure stick right here, and you will okay set another target at this point in time. Here it is. By using this strategy, we can pinpoint possible reversal point, even the end of the fifth wave. Look where the fifth wave has ended by using okay the width of the first wave. Okay, here it is. Here it is, my friend. One first wave, second wave, third wave, fourth wave, and the fifth wave ending exactly here. The strategy is very simple because why it's working, because it's based on the price itself, the width of the first wave or the height of the first wave. It's the first thing you remember when you want to forecast the whole okay cycle. We can use the first wave and the second wave. Talking about market forecast using the first and the second wave. All right. By measuring the width of this okay first wave, we can determine possible reversal, possible entry point, possible exit point, and also hot spot trading zone, applying the wave principle like a wave genius. It makes sense? It is also powerful. Now, as I explain this to you, you may say to me, John, it worked this time, will it work all the time? It's based on the market principle, very simple. You see here again, you see Apple stock, if you consider the last 10 years, all right, so now I count the wave here. All right, this move here is a 5 wave, which is telling me that this is a motive wave. All right, but we have a bigger cycle. So if I place on my chart 2005, okay, it will be the mid. If I put here mid, okay, 2004. All right, the last 10 years or so. All right, you can see that we have bullish trend, my friend. Yes or no? Followed by a correction. All right. Apple is a dynamic bullish stock. So you see, bullish trend, correction, end of area wave. Look again, bullish trend, correction. Another move again, bullish trend, a correction. This is a pattern of dynamic bullish financial instrument. okay, company that are creating value consistently. But now we have a bigger cycle, okay? So if I start counting wave again, pay attention. So a wave on a one time frame can be a minor wave on another time frame. But if you, because I count a wave from here to here, if you look again, we can count area waves from the 2005 first wave. Are you with me? Trending first, yes or no? So the correction first will become our, okay, second wave. So first wave, second wave. Look at this. Third area wave, fourth area wave, and the fifth wave. So considering the bigger cycle of the 10-year for Apple stock, we can see that, okay, we have a multi-wave starting from mid-2004 or say 2005 all the way to 2015. That, okay, trending phase has ended. We are now in correction for Apple stock. Will it be, okay, a flat correction? Will it be a zigzag? Will it be a sharp correction? Now we see 1, 2, 3 down. The first thing that is coming to our mind is that, okay, the minimum price move is free, all right? Remember the first free wave trading system, all right? The minimum price move is free, 1, 2, 3. This is not a multi-way because it's correcting, okay, this trending first, yes or no, okay? It's correcting this one. So this is not a trending first. If we see here 1, 2, 3, 4, and then it goes down 5, what is the area wave pattern that will come into our mind? This is a test. What is the area wave pattern that will come to our mind? The corrective wave that is forming of 5 wave. 1, 2, 3, 4. If you count down, if, all right? Count down one more time down. The correction that will come into our mind is what? Zigzag. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. 1, 2, 3 up. And then 1, 2, 3, 4, 5 down. The zigzag pattern. If you don't know about the zigzag pattern, go to www.24areawave.com. But as it stands now, we have only 1, 2, 3. Price try to go up. You see, traders are selling it now. So at this point in time, there are many things that will come into our mind, okay? Different type of correction. So at this point in time, what I will say, okay, I will draw my compulsory line here. This is a possible reversal zone. Why? You should know it now. The minimum price move is free. All right? So somebody is trading Apple stock. We pay attention to this level. I will be a little bit conservative. In fact, I can put it at the top of this high here. All right, I can put it there. But let's put it here, okay? I will say to myself, okay, if one above it and it retest it here, okay, we can use a top-down trading method to trade it here. If it's going to be a flat correction, there will be a reversal here because minimum price move is free. So we will expect something like this. 1, okay, 2, all right, 3. It can go above this high because of the expanded flat correction. There are different type of flat correction. Okay, check the videos on our channel, okay? Expanded flat correction, classic flat correction, running flat correction, all right? So if it's expanded correction, it goes above this high. Going above, okay, the fifth wave and the zone of 138.2% Fibonacci extension level. Check the flat correction, all right? Do you go to our website just to watch? Watch the videos, all right? All right, you will love my accent, okay? So now, we may think of a flat correction, which is a double retracement, 1, 2, 3, 1, 2, 3, and then we'll come down, 1, 2, 3, 4, 5 down, okay? That's one scenario, possible scenario, but that different variation of the flat correction. Now suppose, my friend, it didn't do that. Our expectation was not fulfilled in that way, okay? One step at a time. Now suddenly we see now, we say, okay, now here it is. You see 1, 2, 3. It went up a bit now, so we may say it's now in 4. It can be a flat correction. But suppose, my friend, continue to go down and pull it down here at 8146. Now what is coming to our mind? We say, okay, what kind of correction is this in 5 more? 1, 2, 3, 4, 5. So which correction? Zigzag, right? Zigzag pattern. Now remember, there can be complex corrections. All right, so looking at the bigger cycle, so we have now first wave, second wave, third wave, fourth wave, and the fifth wave that has been subdivided into 5 waves. Now, another trick that I want to share with traders talking about the wave genius technical analysis, talking about wave genius is somebody, okay, who is using a specific strategy to trade the wave principle. All right. So that's why we create 2 pages on our website, Wave Genius #1, Wave Genius #2. It's just one video that you watch in one page, another video there. I did it on purpose, okay? So here, you can see one thing that you should know, the stochastic will remain overbought for a long time during the 3rd area wave. When everybody is busy selling, and the price going up, you see? This is the 3rd wave. This is the candlestick. One indication to identify the 3rd area wave is the stochastic will stay overbought for a long time. Look, 2009, 2010, 2011, 2011, 2012, 2013, stochastic was overbought. We are in the 3rd wave. Resistance being broken, up. 1st wave, 2nd wave, 3rd wave, 4th wave, 5th wave has been subdivided into 5 waves. Will we have a flat correction? Maybe, because a dynamic bullish financial instrument very often will display a flat correction, because if the bullish momentum is quite strong, we are likely to see what? A flat correction. But now some traders may say, Joe, thank you so much. You said to me to buy Apple stock. No, I did not. In fact, I don't do it, okay? I don't tell traders to buy or sell. What you should do is to use a top-down trading method. This level here, 9624, priority to bullish signal above, prior to bearish signal below 9624. Now, if it's going to be bearish, you will see it. It will be stuck. Okay, there's a trend line that I'm going to draw on my chart without moving my prior trend. This trend line here. Okay, let's color it now into black. Think of black belt. Okay, you do Shotokan. Okay, if you've done Shotokan before, you know what I'm talking about. Okay, as long as stuck below this trend line, trader will be giving priority to bearish signal. Why? Because the market pattern, the medium-term market pattern, is now a declining channel. I don't fight the market pattern. I do not fight the market pattern. Okay, this is what we are talking about. You remember what I said to you? Even if you are wrong with your wave count, one thing you do not want to violate is the market pattern. Okay, a low, a lower high, a lower low on the edge. Traders sold it here this month. Breaking it down, now we are here. This level here is a very important level. All right. Talking about wave genius, you remember how I measure the width of this one here. All right. I want to show you again for the bigger cycle. So we did it here. You see, talking about wave genius, technical analysis. We did exactly the same thing here for the first wave, drawing a line at a low and a high. Let's do exactly the same thing here and see whether it's going to add up. Okay. All right. So my first wave, which is the bigger cycle, placing 2 horizontal lines, you see now, at the low of, okay, bring it down a bit, at the low of my bigger first wave, and one at the top, yes or no, okay? So we say if the price goes above it, we look for, so this level here, you see how it breaks above, so trader catch the 3rd area, you see the tail of this candle, break above, tack, entry point, okay? This is the most conservative way to enter the 3rd area wave. So if you are fighting with the 2nd wave, you don't know when because trader asked me one time, how do you know the 2nd wave has ended? Okay, you can just wait. The most important thing that it doesn't cancel the 1st wave, so you can just wait, goes above the high. Here it is, break above, retest. Okay, peacefully, okay? And then break above, retest, apply top-down to the method. We're on a monthly chart. You combine monthly chart, daily chart, hourly chart, top-down trading method, all right, for position trading and swing trading, okay, right here. This is your entry. So now let's use our measuring stick. Okay, now it goes above it. We are just using our measuring stick to determine what? Our exit point, okay, possible reversal point, okay, and possible entry point. Look, as the price went above it during the 3rd area wave, we can subdivide this 3rd area wave into 5 waves, but I don't want to waste my time on that now. Okay, it's a very extended 3rd area wave, all right? Okay, extended 3rd area wave, here it is. So here it is, you see, trader took profit here, yes or no? Will you agree that they took some profit here? There was a consolidation at that target. Okay, let's project it one more time to set our, you see, in fact, the price went above that level, went all the way here. Look where it stopped, on top of that projection. This is our 3rd, our 2nd, okay? So first projection brings us here, this, okay, the 2nd projection, bring us here. Look, did they take profit here? See how the price stopped here? It stopped here before pull back again before going up. You see now? Let's do it one more time. So prime went all the way up here, came back to retest that level. Those are the levels you want to use to control your wave count, your wave analysis, and also to manage your trade carefully. This is about wave genius, okay, technical analysis. So it goes above it again. Where do we place our line? Well, we got our measuring stick, okay? Now you understand why I have too many lines on my chart. You think I'm getting crazy? I'm not, okay? All right. This is to make you laugh a bit. So you can project it again here. You set your target again here. All right, here it is. It's possible reversal point. So the way you pull back like this, okay? Here you have your line as it goes above it here. You have it there. You don't want to forget it. You leave it there, okay? That's why I don't move lines on my chart, okay? Here it is. This line here is very important for us to monitor the trend. So here, you see here, it goes above that line, what it did. Am I talking to myself? You see here, it went above it again, retest it. The market is mapped out, okay? That is happening by mistakes, all right? As ordinary traders are fighting with the stochastic, professionals are using wave genius technical analysis. Okay, one more time, it goes above it, yes or no, okay? So you buy when you pull back like this. Okay, let's zoom into the chart, my friend. I want you to understand this clearly because I promise that I won't hide anything from you. Here it is one more time. We project it here. Can you believe that? Where the price did change direction? Let me place another vertical line there. Do you know that we have talked about this at Wave Genius, okay? A different way, a different thing that I show traders for that. We use the width of the consolidation that takes place before the first wave, because a consolidation, am I talking to myself, okay? You remember our wave count guideline, consolidation breakout, okay? First wave we break out of the consolidation. We can use the width of that consolidation as our measuring stick. We can also use, okay, the height of the first wave as our measuring stick. Either the width of that consolidation that was taking place before the first wave as our measuring stick. We can also use, okay, the height of the first wave as our measuring stick. So look where the price is stopped on the dot. So first projection, second projection. I say to trader, when you have third projection, be ready to count your money, okay? Which means the market is considered as overbought. So you see first projection, okay, second projection, third projection. The market is considered as overbought at this point in time. So by counting your wave, you will start trying to be careful. Become overbought when? Generally during the fifth wave. So at this point in time, you may cash out and let other traders play it, okay? All right, here it is. You see 3 times, you can just wait and see what's going to happen. And you set your target here. You see how it's working beautifully. Another thing I want to clarify with traders, I want to see how long I have been talking to you, traders that are so busy. All right, I want to wrap it up, 23 minutes. Thank you for watching. I want to show you one more thing, okay? Talking about Apple stock, talking about wave genius, technical analysis. I want to show you something else. We're going to combine now, okay? All right, the wave principle with, okay, Fibonacci, okay? All right, you see, I put my Fibonacci retracement from the beginning of the first wave to the top, okay? So we told traders that we can forecast the whole area wave by using the first wave and the second wave, yes or no? All right, so I don't want to go into that now. So I want you to see the retracement of the second wave here. I can tell you now it's 61.8% Fibonacci retracement level of the first wave. So our second wave has ended at 61.8% Fibonacci. Can you see 61.8% on my chart where my cursor is? In this place here, all right? 61.8% Fibonacci, that's the level here, this level here, okay? That's the end of our second wave, okay? 61.8% Fibonacci retracement. So with this information, we will be thinking that if we apply, okay, my friend, if we apply the Fibonacci retracement to the whole bigger cycle, okay, the level that we will be watching is 61.8% Fibonacci retracement level of the whole cycle. Which level? Here it is. Okay, I want to give you that exact level. 5290. 5290. okay? In that zone, between 52 and 55, that's the 61.8% Fibonacci retracement level. So this correction that's begun can, I repeat, can bring the price all the way to 52.90. That remains to be seen. My friend, do not use this trading video as a trading signal, okay? And also we can see that the correction was 1, 2, 3, okay? 1, 2, 3. So talking about wave forecast, we will be thinking that, okay, probably this move now will be in 5 moves. So it will be 1, 2, 3, 4, 5, 1, 2, 3 up, and then 1, 2, 3, 4, 5 down, forming a zigzag pattern. Looking at this correction here, that's what will come into our mind. But some trader will say to me, Joe, you just forecast Apple stock for us. This is exactly what will take place. But what I'm trying to do is to avoid, okay, is to say to traders our approach. Our approach is that we have an expectation, which is, okay, what is likely to take place, but we do not go and place trade on expectation and hope alone. We go back to the price. The price must confirm our expectation, our hope, before we can place any trade. If there is no confirmation, it's just a forecast, it's just a hope, it's just an expectation. This is the message. That's why all the time I'm trying to repeat myself. So don't get upset with me, okay? All right? All right, it's good to talk, all right? So here we are. So we will be watching that level 52, okay? All right, that level here, the 61.8% Fibonacci retracement level. But now, my friend, okay, you see that? So let's, I don't want to remove my, okay, let's bring back my Fibonacci retracement back to the point where it was before. I want to draw your attention. So we have one cycle here, price trending fast, correction, yes or no? Then we have another trending fast, you see? From 2009, which you remember the market from 2009 was bullish. So here it is. From 2009, Apple stock, which is a market leader. So you are analyzing the Dow Jones Index counting wave. You are analyzing Russell 2000 counting wave. You are analyzing the Nasdaq 100 counting wave. You want to pay attention to the market leaders. All right? Very important. We mentioned the market first, okay, S&P 500. We are also talking about the market leaders. If you are counting wave for indices, you want to pay attention to the market leaders, okay? All right? If you want to know more about market leaders, go to www.dayprotrader.com, click on Market Watch. So we have a new cycle from here, a trending fast and a correction. That correction has ended at 50% Fibonacci retracement level. So the first correction brought the price to 61.8% between the first and the second wave. Now between the third and the fourth is 50%, because normally the fourth wave is usually shallow. So there is no big surprise here that the fourth wave is, okay, is shallow, or in comparison to, okay, the price went down more. If you measure the width here, you see that it went down far. But talking about a ratio between the third wave and the fourth wave is 50% retracement. But talking about the ratio between the first wave and the second wave is 61.8%. So we may say this is a deeper, but it's not, because if you measure, okay, the distance from the top of the first, wave and the low of the second wave, it's just this. In comparison to this move down, this one is shallow. But if we talk about ratio, we may say that it went down more. The ratio is more important. Okay, so this is 50% Fibonacci retracement level. Okay, all right. So there is Apple stock is using 61.8% and 50%. This is also one of the characteristics of a bullish financial instrument. Bullish financial instrument will find either support at 50% retracement or at 61.8% Fibonacci retracement level. Remember what we have talked about before? Remember? You remember? Okay. Talking about how to combine Elliott wave, okay, and Fibonacci. There is another level that you don't want to forget. I'm going to bring it again to the top of the consolidation, and I'm going to highlight a few things that the professionals are watching. So they are watching the 61.8%. Because of the second retracement at 50%, they will be watching also because it's a different cycle, they will be watching also the 50% Fibonacci retracement level. Apology to traders. Okay, in a zone of 60, call it 68.00. All right, that's the 50% Fibonacci retracement level of the bigger cycle from here all the way here. Okay, 50% level in the zone of 68. All right, they will be watching the 61.8% in the zone of, call it 53. All right, and they will be watching the oversold zone, which I don't normally traders use 78.6%. I always use exactly 78%. All right. Reality, the 78% is 28. The zone, call it $29. I doubt it. The Apple stock will drop down from where it is now up to $29. I doubt it, unless something dramatic is taking place. All right. But when we have a trending phase, we count first wave, second wave, third wave, fourth wave, and the fifth wave. The levels that professionals are watching is the zone between the 50% and the 61.8% Fibonacci retracement level. The financial instrument will become completely bullish, and we become over-considered. The financial instrument is considered oversold, okay, if it reaches the level of 78% Fibonacci retracement level. All right? So you count 1, 2, to find a oversold financial instrument, you become 1, 2, 3, 4, 5 waves, all right, and then probably pull back to 78% Fibonacci retracement level. Okay, let me show you one example quickly that we have seen for the S&P 500 on a 5-minute time frame. Can you believe that? On a 5-minute time frame, we have seen what I'm talking about, the 78% Fibonacci retracement level. Okay, here we are on a 5-minute time frame. I count this way with my chart. You see here, consolidation. In fact, if I form an inverted and they show that chart pattern. And then start going up here, you see, on my 5-minute time frame, okay? All right, see here, beautiful. This level here is a key level, 2082. And also this red line is the median line of the channel on the weekly chart. So here it forms, it's like 1, okay, 2. You can't see clearly my waveform because I have, see, 1, 2, 3, 4, 5. That's how it went up, okay, from this point onward, okay? But then look carefully, okay? From here, we apply the Fibonacci retracement level. And because we have a bullish trade setup, the stochastic 833 on the 2-hour time frame display a bullish divergence. So this was our trading setup. So by now, because we have a bullish trading setup, it went up 1, 2, 3, 4, 5 on the 5-minute time frame. And then look where it pulled back. Can you see the 78%? 78% on the dot. Look, touch it here. Boom, on the dot. Found the support. Went up that day, but because of the time of the day, talking about the best time for day trading, there was no more demand. The following day, which is today, 27th of April, the market did open here. What it did, it went back down below that level, the 78% Fibonacci retracement level of what I'm saying, 1, 2, 3, 4, 5, that trading fast, only to retest exactly today the 78% Fibonacci retracement level on the dot. And then from there again, you find the support. 1, 2, 3 going up. Okay? All right? You see now? So let's bring that back again, Apple stock, and I'm going to go on the monthly chart. So a financial instrument is considered as oversold if we count 5 waves and it pull back to the 78% Fibonacci retracement level. Okay? So after an uptrend, it pull back to 78%. Generally, or theoretically speaking, is considered oversold. One must now check the financials and apply top-down trading method. There can be 100% retracement. So don't assume that because the financial instrument pulled back after an uptrend to the 78% Fibonacci retracement level is definitely oversold. Theoretically, it's oversold. But now you will check the financial at Google Finance and Yahoo Finance, and then you will implement a top-down trading method. So what I got to do with a Wave Genius technical analysis, because we have counted a bigger cycle that is formed of 5 waves, we don't want to ignore that level, which is near the level of $29. But I doubt it. But looking at the first trend and the correction here, this is one Elliott wave cycle from the beginning of the trending phase to the end of the correction. That's one Elliott wave cycle. All right. Okay. Now we have again another trending phase and a correction. The first correction was 61.8%, the second at 50%. But this is the fourth wave. So we will now pay attention to, okay, the 50% Fibonacci retracement level of the bigger cycle. And we will also pay attention to, okay, the 61.8% Fibonacci retracement level without ignoring the 78% Fibonacci retracement level. It makes sense? Remember what I show you, you will draw one horizontal line at the high of the first wave, another horizontal line at the low of the first wave, and you will use that as a measuring stick to determine possible exit point, entry point, and a hot spot trading zone. All right? It's true during this fifth wave, which has been subdivided into 5 waves. It's true also for the bigger cycle, as I demonstrate to you how we pinpoint the top of the fifth wave right here. Apart from that, one will also pay attention to the Fibonacci retracement level. So the same thing we are applying to the same Fibonacci ratio we are applying to the bigger cycle, we can apply the same strategy, okay, all right, here. So we count it now, you see here, we count it again, 1, 2, 3, 4, 5. Which level should we watch? Okay. Once again, we apply it to the fifth wave, we draw it like this. We will be watching which level? The 50% level, that's where we are now. The price is now at 50% Fibonacci retracement level of the fifth wave. So we'll be watching the 50% Fibonacci retracement level. We'll be watching the 61.8% level. So if it's doing the zigzag, you bring it down below the 61.8% level. All right? So the first thing that's coming to our mind is this second wave here. Okay? So 61.8% of the fifth wave. Not the whole cycle. Don't get confused. I'm applying Fibonacci ratio to the fifth wave alone. Okay? So we will be watching the 50% of the fifth wave, the 61.8% Fibonacci retracement of the fifth wave, and also the 78% Fibonacci retracement of the fifth wave right here. Alright? The wave count is fractal pattern. We can look now at the internal wave of the first wave and also dissect the internal wave of the second wave in order to forecast the correction that is likely to take place here. Okay? It makes sense? It is also powerful. This is Wave Genius Technical Analysis. If you want to learn more tips and tricks about Wave Genius Technical Analysis, go to www.24elliottwave.com, click on Wave Genius Part 1, Wave Genius Part 2. I will be placing this video on another page that we call Wave Genius Part 3. All right. If you have any question, as always, please do not hesitate to put your question clearly in the comment section. And in due course, I'll record another video to answer your specific question. If you have any suggestion, put it clearly in the comment section, and I will get back to you. All right. Okay. Now, for a trader that asked me to do a video about how do we see the end of the second wave, if you don't want to bother yourself too much about where the second wave is will end, tell them very often, because the general rule that the second wave should not go beyond the low of the first wave, they will position themselves near the 61.8% Fibonacci retracement level of the first wave, expecting the price to turn around. But if you don't want to catch the third area wave here, you can enter the third area wave, you can enter the third area wave above the high of the first wave. It makes sense? It is also a powerful, all right? We wish you the very best in your trading, and until the next time, enjoy yourself and be very happy. We are the GSTW24 traders talking about Wave Genius Technical Analysis. Speak to you soon.